Let's see if we got a few people on. All right, let's see what we got here today. So turn this off. So I'll remove everything here for shits and giggles. We'll go to 30 minutes. We'll turn on SVP. Just make sure. All right, so here's our SVP, and this is what we've been talking about, right? So a lot of you asked, hey, how do you know where to draw the, the fixed range that we are in right now? I mean, if you just take a look at this, it should be fairly clear, where we are in terms of price action. If you look below here, this is the first time kind of you're after this breakdown that you're above here, and this is the area of interest now. So anything beyond this point to the right, it's not a bad idea to draw it. I include this full volume profile so that way I have, even number or just full number of days. So I do include this one here. And then let's say I draw this guy, and I usually don't have style. I want 45. And now I'm able to kind of draw my logic of what's happening. Whenever you're consolidating, and I mentioned this before, whenever you're consolidating like this, there's a high probability you're gonna be shorting the tops, the extremes, the 2-3 sigmas, and that you're gonna be looking, to go long off the bottoms, which is right now what's happening here. And if you guys look, this is our 68 right here. Our 68 is right now at 41, 42, I believe. Let me make sure. Yeah, so this is your first sigma here now. So I think rollout asked today, how did I know that this was going to happen? Whenever the stocks go to one opposite, right, and you get a nice little bounce, that means usually other time frame buyers are in there. So if I go to 95, it's going to be somewhere around here. This is our 95. This is the 2 sigma here. I can expect buyers and sellers to be really, really present here. So if I was to go here, this is 2. This is 1. Let me just mark them and then I'll continue. Anytime you break, when you're consolidating like this and you're breaking the, let's say the first sigma, your first ultimate target's probably going to be the next sigma, or in case this, we're aware of the shelf that was built up here. We said, there's probably a high chance that we're going to be rejecting somewhere around this shelf. And that's pretty much what happened today. If you're bouncing off the bottom, they're going to be targeting the opposite extreme. First, if they bounce off of first sigma, your next target, is POC. The second target is the opposite extreme of that same sigma. So this is if you're to flip this chart, right, this would be your negative skew, this would be your positive skew, and this would be your negative skew. So that's why I was expecting this bounce or run up. Once we hold this and the other time frame buyers show up here, they're going to target the opposite extreme to make sure that, their seller's still there. And we talked about what they did previously here, if you guys recall. They did the same trick today. Let me just not extend this. Same exact trick was executed today, if you guys look. Look at this area right here. I'm just going to hide these for now. Look at this area right here, and they popped. Look at this area here. What did they do? They popped, right? And then I talked about the 539 candle this morning on 3 minutes. Let's find this guy. Somewhere around here. I think it should be this one. Yeah, there we go. This candle was really, really interesting. When I woke up around that time and I looked at this candle, I was like, oh, this is what you guys are trying to do. You're going to bring it back here and you're most likely going to dump from there again because I know what's happening right above it. And in this case, they went slightly above it when there's a lot of warning signals in this little cluster here from volume perspective. And I knew that there's a high chance for a rejection just because we are extremely on the opposite side of the value right now. And then if you look at this, right, if this is our shelf, look where they rejected. So they rejected here. You had this POC that was, I would call it right there, and maybe tapped it. you need to look at it maybe a little bit bigger picture and look at the tap on the POC here. So 65 minutes, look at it. It's a perfect tap. And did we cover this last night? If you guys are on the watch list, what did I tell you guys about this POC last night?
Watch for the tap.
I said, watch, it's gonna most likely come there and reject. And I don't know at what minutes on watch list, but I'm pretty sure it was there. You can expect a rejection anytime this happens. This is called an ideal trap here. You see that this was a strong high. Strong high means you come to the point, right? And you get a quick rejection. There's no consolidation, right? If it was a weak high, you would get something like this. And then you would, slowly go down. This is called a weak high, somewhere around here. But in this case here, this was not really a weak high. There was a lot of excess supply here that they needed to get rid of really, really fast. And look what they did. They brought it back down. Then, 65 and a couple of maybe 2 hours later, they came back here and they're like, hey, we're going to go higher. Retail buys this. And then look at this giant candle here that led all the way down and they went to the opposite extreme. And then, of course, they tried again. They'll let the POC. Once you break the POC, whatever the side is, most likely you're going to tap the first sigma, and that's pretty much what they did. This sigma is going to vary by 3-4 points day to day, depending where we are in terms of the price, right? If you're above the POC and value is building up, probably value area high is going to be increased versus the value area low, and vice versa. Okay, does that make sense? Roll out. You're looking to play opposite extremes when you're consolidating. I was not looking for any longs here today. I was just timing this short here. And that was the short here that I was after pretty much. Okay. So now.
So one of the things that threw me off is I get where we had the consolidation where it expected to drop. I expected that as well. Now I expected it to drop to that shelf that was like about, I think it was like at 41.46, 41.44, but we actually came all the way down to grab that liquidity that was at 41.34.
Okay, so let's take a look at it. Where's your overlap on volume here? I'm on 5. You can go on 15 minutes, 10 minutes.
I'm on 3. I'm on 3 minute right now.
No, I know. When I'm looking consolidations, I never look at on 3 or 5 minutes. I usually look at 15, 30 minutes when I'm looking for where's the consolidation here. So if I look here, this is pre-market. I care for it, but I don't really care for it too much. And they know, most people know whenever you're consolidating like this, after hours, the volume is going to be weak. Even though it might look strong, it's not really strong. I'm interested in this right here. This is where the overlap of the candles happens. You see this?
Yeah.
And if I draw this POC, I mean, this dripped all the way to this level here. You should have had this level marked on your charts, everyone. This level here was fairly big, and I don't know if how long you followed me roll out, but I don't believe in single levels. Like this level here around POC, I usually look at the kind of like volume around it, right? You don't have to look at these numbers, but if you look at the volume around, I'm just grabbing even amount from POC down, let's say 2.5 shelves down, 2.5 shelves up, and that becomes your supply and demand zone, okay? So now if I look, this is most likely where we're going to bounce a lot. I mean, it took a long time to build this. It took from March 30th till now, this POC is here. And I believe even if you go a little bit to the left and grab a lot of data, it's still going to stick around this level. So this level is fairly important. And you see that it's important. Look at the, from the beginning, they've accumulated a lot of volume here. And even if you took like market profile, we've spent a lot of time here. So you spend time here. You spend time there, here, here. A lot of time spent on that level. That means a lot of volume is being shared. And usually that's point of control is the highest number of volume. So anytime we came today, and what did I tell you guys today around 10:30? Did I say I'm long here? You guys recall that? Was anyone reading?
Yeah, I saw that.
Yeah, I was telling you guys I was
Yeah,
long, and
no.
my first target was 37 because I was looking for. I saw the range that they built, initial balance. I wasn't expecting huge moves, so that means I have to lower my expectations on, what am I getting from the market, and what is my risk. So I took that, and then I was like, well, maybe I should short it. I tried shorting, and I got immediately stopped out. They stopped me out, they came back, and then of course you see kind of like a V-shaped recovery. But you have to look for consolidations and know when you're in a range like we are, for past, I would say now 9 days or so, you have to know where the CPOC is, meaning the cumulative POC is, and it's right here. That 4131, or it was 4130, yeah. This also happens to be a February VPOC. No longer a VPOC, but this is February POC right now.
Yeah, 4132, 4131. Yeah.
So this is a fairly big level here, right? So now, if the only way I would short this, and it was in the notes, is the way I would short this is if we break this level. I will short it here, and it was here as well. That's the only notes that I left for shorting. If you guys read the Shorty's Corner, I didn't leave much more besides that. It was just those two examples. This is all I had. 4150 should provide resistance. We hit this. And then I said, check the, where was it? I think I wrote somewhere the 3-minute candle. I did, yeah. Check the 3-minute candles. And this is what I said. If we break this level, the 236, meaning the second and the third standard deviation, is probably going to offer a good resistance. And this is the second short, depending on how we opened. If we break below that 4130, there's a high chance that we're going to pretty much flush to at least first sigma here. So does that help roll out? Are you following along?
Following to a certain extent. I haven't really got to the point of dealing with cumulative POCs yet.
Okay.
Just been trying to master the fixed range and the session and
Yeah. So if you think
previous
about this,
unit.
I mean, your fixed range is basically, if I zoom out here, let me go in 3 hours. Look.
By the way, what I did was I took the fixed range of, I did that swing from 1045 up, and I was operating off of that instead of operating off the 5-day back. So I kind of see it now once you pull the
Yeah.
screen out.
So you're consolidating here. We have a lot more data. You have a lot more points to consider, right? When you're trading market, you like data. You want data. You don't want a lot of data, but I usually, if I see a range like this, yeah, of course, you want to be aware of it. And then, if I want to know, like what you did, if I want to know if we lose this level, let's say to the downside, what are my key levels? Well, that wouldn't be too difficult to figure out, right? Then I know, there's a shelf right below it that they might protect, which is 4088. Does anyone remember what this level is? Come on. Okay.
You said 4138?
No, 4088.
August value area low?
What else?
Is it the quarterly value area high?
Very, very close. Yep.
March
I
high?
don't know, but I have it marked.
You don't have it marked?
I don't
Is
know
it
what it is, but I have it marked.
Okay.
marked value area high?
Yeah, it's there. And then at 4090, you have quarterly, somebody set it value area high. So that level there is going to show some significance, right? But think about it. Now I'm giving this full picture. I'm grabbing data from, let me grab even more. So let me go to April 11th. There. I'm grabbing 12 months lagging here, meaning just trailing 12 months. So now if I look here, right, I'm grabbing this, and here's my, we'll color this one some other color just so we have it. What did I tell you guys today during the day? That there's a 12 months value area high. Does anyone recall that?
Yeah.
You had 12 months value area high. You had the POC that was here 2 points away, right? And there was another thing that was at 55. Does anyone recall what was at 55?
Second
0.5 fib.
That's correct. So you had all of this. You had a level here, and the second sigma. And I even said it, this is a high probability setup for a short if we come into this POC, right? And just the confluence of the data, right? This yellow line is not to be ignored, right? It's not something that you should really just look away from. This is a big level. Like in order for us to just think about what does this level mean? For 12 months, we are knocking on the door, breaking balance, guys. That's a big level. Does everybody understand the importance of it?
Yeah.
So I'll delete the yellow line here. So just look. What happened anytime we went and tried to break the balance of the past 12 months? Just follow the price. You know,
Yeah.
here you tried to break it, you didn't like it, and where did they send the roll out? They stuck a little bit at the POC, eventually went to the opposite. I would say they probably hit this 2 sigma here on the bottom, right on the bottom, and they bounced it, right? And now they would have to do some magic, right, to get it here at 42.60. If they break this, I would say high odds that you're gonna go to this sigma here. But they really haven't been successful in getting there. So they gotta break this shelf. If they're able to break that shelf, call it, you know, if you wanna play off of this, you have a lot of, you know, 41.85 is 41.83 is the level I have. If you're able to break that, high chance you go 42.60. But they're struggling a little bit here. And this is big, big, big time levels, guys. If we fail here, 35.92 is coming. And I'm not saying it's coming. Don't quote me and say, yeah, man, it's coming. Shorty said it's going to come in. We're short. No, it takes time. I mean, I'm on a 12 months worth of data, just time that, you know, how long it took them last time here. It took them 45 days. That
Shorty,
means
that
the
was April
cycle
what?
is going to start coming down from here. That means the value is no longer found. We reached the values. There's not enough value for other time frame buyers. Now the long-term sellers come into the play and they're going to push the price. Remember, when their inventories are empty, I covered this last night, when their inventories are emptied out, meaning hedge funds, what do? Can they sell when their warehouse is empty?
No.
Nope.
They have to accumulate again.
No. So they first have to give you some bad news, some bad ER, bad PR. And then once the price comes to a good level where they can buy it again, like let's say here at 39.62, you would expect a bounce here. You can play the bounce, but if you lose this level, the odds greatly increase that you're gonna go to the opposite extreme, first 68. Somewhere around here. So 3,800. Does that make sense? Anyone? Does it help?
Yeah.
Anyone else that's not in the, I don't know, I don't want to call it premium Discord, but in our paid Discord, if you're confused, you can raise your hand. And anyone, I mean, just raise your hand if you're confused. This is fairly simple stuff. There's a lot more complexities in the market, but this stuff is fairly straightforward.
That 12 months was from April 8th, you said?
It's a trailing 12 months. So if today is 4/11, you go back to 4/11 of 2022.
Gotcha. Thank you.
And roll out. Here's another example just for your visual. Okay. You see this consolidation here? I would call this a consolidation. I don't even have to look at it. I can tell that they consolidated here because there's a lot of candles overlapping, right? See this?
Yep, got it.
If you want to know where they're going to bounce, and just make sure you're not an extended, you just look for this consolidation, find that POC, And there you go. Think about it. I think you would manage to have less than 12 points stop loss on a daily chart, right? So from there, we obviously ran all the way to 41, 70, right? 72. So there's that. Like 300 points or so.
Got it.
And it was just targeting the opposite value, the first sigma here, and then the second, I guess, of the miniature. I would say your first level was this one here that we just arrived. Does that make sense?
Makes sense.
Okay.
So with that trailing 12-month, you're just redrawing that every day, right?
Yeah, I look at it,
variation?
and that, you know, it takes, so if you think about the law of average numbers, right? One day, can it really, you know, if you had 10 A's and you get a D, you're still going to have an A in a class, right? It will have to be something really, really bad in the market where you get a, and I'm talking about like a dump, you know, a single day dump. If you got something like, you know, 200-300 points like this, then that can shift a lot. But these days that we are having now with no volume, they don't really shift. I keep these levels on, and then I will, you know, every Sunday or so, or even maybe once in 2 weeks, I will just recheck to make sure I'm aligned. And I pay attention if they broke the sigma, the first sigma, because that tells me they're seeking new balance. And if they're seeking new balance, I can expect, you know, an imbalance to occur. So that's the main reason why I look at the bigger picture. So I know in the bigger picture, like I see all these pumps and dumps, are we in balance or not? That's all I care about. And we're in balance still. Okay. And then you have this consolidation. I think this was 41.43, if I remember. 41.43, yeah. 41.43.50. This is a big level. Because this is not a tapped supply, meaning we haven't been here before. We dumped from here. This is your first revisit. And just so everybody knows on the call, whenever you have consolidation, let's say you're consolidating like this and you dump, well, they're going to find a way, you know, to manipulate, change the character, break the structure, come back. Typically, what happens is that they like to break this POC that we're going to draw from here. They come back under it, and then you short the hell out of that POC to the previous demand. So you pull the POC off of this area here, you find it, let's say it was here, right there. They like to break above it, come back and retest. And if you go back and look on even on daily charts, you'll find a lot of these examples. And that's actually my favorite setup to short. And if you look now, that's exactly what's happening here at 41.43. And I know I have lines everywhere. I'll delete them and make it simpler, but let me show you. So this is your sell-off POC, and you see them hit, broke it, came back, retest, struggled, came back again, and now broke it. Ideally, they come to this range, and it would be a good short. There's a lot of confluence levels here, 41.44 right now. On 10 minutes, there's a secret supply. They're consolidating here, right, at 41.36. I mean, there's a lot. If they lose this level here, strong chance we're going to be here tomorrow morning. And now, if you think about this, right, can I not grab this and look at this data here alone? Can I not zoom into this consolidation now here? I mean, it's kind of like a broadening formation, right? Retail or whoever trades. That's what it looks like, right? You guys see it?
Yeah.
Mhm.
I don't trade those, but what I do trade is I'm expecting a rejection here. If they're to, I don't know, you know, it's an event day, I'm not gonna really trade it. But if I was to, you know, they can pump. Once you lose this, then you could probably potentially short it, especially if they crack this POC. If you're really risk averse and you don't want to mess around with the market too much, I'd suggest you wait for these 8 points to clear here, because that can help you a lot. And this is a really poor structure from here. I didn't mean to do that. This is a really poor structure from here to here. I mean, there's not much. And even if I go to the first high, so I don't grab a lot of consolidation, they don't have a lot besides this 41.28, right? So I would expect them, if they're able to lose that 41.28, that they can dump. So does that explain today's price action to anyone?
For sure.
And today it
Yeah.
was, I would say it was fairly, it was a choppy day. I didn't, take long but one time. And other than that, I was just looking for opportunity for them to give me the signals kind of short. I was looking at this at one point and I'm like, I just don't trust it. I didn't have a nice break candle of these two. I really wanted to see a break here and continue. Then they did this one and I'm like, damn it, did I miss it? And I'm like, okay, well, I just didn't see a lot of, volume on these breaks. This one needed to carry a little bit more volume on that break and it didn't. Then this one here started picking up volume and then decision, and then this one confirmed it. This one here is the one that we were looking for. Okay. So tomorrow, and then if you look at the daily profiles, this is something you guys need to get in the habit of doing. Not this one. There it is. So if you guys look at this, what is this profile telling you today?
That it attempted to, it traded in a range, attempted to break out, but failed, came back to where it was trading prior.
And if you think about those dependencies that I explained to you before, right, or in a PowerPoint, this is a compressed B compared to some other Bs we've seen, correct?
Mm-hmm. Yep.
Like the range of this B versus this B, a big difference, right?
Yeah.
Yep.
If this B, they tried to break the value area, which was fairly tight. If you guys think about this, value area was, I think 9 points, yeah, 875. You broke this to the upside, but you failed. Meaning, peanut butter was expensive at that level. Then you tried to break the downside here, and they said, we're gonna hold it. This is a pretty good price. And they tried again to break the price higher. They made a higher high in here, but then they really, really emptied out. Whoever had, stuff to sell, seems like they sold at that point. Either they know something is coming, so they're offloading, or they're just a long-term seller that doesn't see any value at this point. So tomorrow, if you want to be aggressive and you want to play this in here, if you lose the PD value area low, you can, but I would not. I would wait for this break here, let them give you a nice little retest, and then I'm pretty sure you could catch this all the way to the VPOC area here as well. This level here is still important.
Shorty, in the middle of the low of the day there, that looks like a spring the way they've made that.
That's correct.
But the volume doesn't really support it. So essentially, would that just be sort of an artificial move?
This one here,
They made it look like, well, I guess it is.
the volume is a little bit higher. I guess it's not the best volume all day, but it's better than what we've seen recently. I mean, yeah. I mean, they're waiting for this as much as we are waiting. They're also waiting, but here, we're still making higher highs and higher lows. So, and the volume's been dead. So, and they do give a look of a bull flag to the retail traders here. So if the retails are buying, calls here, let them break this, and then we have to short below this 41.43, which is the latest POC. But today alone, the session alone, if you guys look where we closed, Where do we close?
At the POC,
What does that tell you?
we came back to our trading zone that we were happy with. People
You're
don't want to
happy
pay.
with, but
People don't want to pay more money for peanut butter.
exactly. But we went higher, but you closed neutral. So in my mind, that leads more bearish than it does bullish. If you came back from bottom value and you closed, let's say, at the POC, that would tell me that you found the price at the bottom to be unfair and you brought it back up, right? In this case, you found the price was unfairly high and you brought the price back to neutral. This is a true neutral case, right? Even though it's neutral, I am somewhat more bearish on the setup that they did today than bullish. But tomorrow's an event, right? So let's see what they do. But I would lean more bearish than bullish here. And, you should not be running, even here higher with, this should have been really a P shape. They should have converted this. They couldn't even get enough volume here to push higher. So I just don't, I mean, they can. I'm not saying they can't push it higher, but it would be a miracle if they can. It'd be really interesting if they can. I'm still a little bit more bearish till we get there. And then if you look at this, overall, I mean, you have this massive POC here. You really need to kind of come back to this level here as well, 3,900. You need to revisit that level a little bit. So I would expect to lose this tomorrow. If 41.28 is a fairly important level, it's also a VPOC still. If you want to wait for that instead of 31, that's okay, because then you have a nice, I mean, the structure here, guys, below this. I mean, just look below this. This is all I would wait for
Yeah, there's
tomorrow.
nothing there.
That's all I'm gonna wait for tomorrow. This is just beautiful short. You lose this, I mean, you can catch 30 points on SPX. That's quite a bit of money. Okay. So any questions on this? This is, I would say, I would not look for any 80%. I am pretty certain we're gonna have what type of day tomorrow? Look at the profiles where we are.
Typical day.
Because it's an event, I think it's going to be an extended normal. I think we're going to spike up with some CPI data, and then they're going to hit the level they wanted to short,
Yep.
and then they crash it.
But in the meantime, they're most likely going to open inside the value area right around this POC, unless they're tipped off, right? But it's leaning a little bit more bearish. Just FYI, it's leaning a little bit bearish. And even if I grab like 2-day balance here, that POC is still there. And we're kind of below it right now. So, Vandalay, this is truly more art, right? With practice, you get the picture, you start building stories. So the 41.44 level, if you go here, 41.44 level is right here. So if you look at this cluster that you have overlapping candles, right? If you look here, I look for overlapping candles. Tell me it's consolidating. If you're not making higher highs, you don't have follow throughs or lower lows, no follow through, you're consolidating. Lower highs and higher lows means consolidation, right? So they're really, really consolidating here, and that's how you get this level. Usually, if you're consolidating like this, I'll look at the 4 hours on this and chart it off of the 4 hours. And that's how I get that level. I'm just looking at the POC. Excuse me. I'm looking at the POC, and then, I would definitely look at this and draw a little shelf here around it. So now I know this is a really, really big problem for them, this little red area that you see here. It might look like it's, oh my God, big range, but guys, I'm grabbing, I'm grabbing like a couple of days there. I'm grabbing at least 10 days there. Let's see how many days we're grabbing. 16 days worth of data. I think I can afford to play in the range of whatever that was. 10 points. Yeah, so yeah, exactly. Yeah, February 16. So yeah, that's exactly what I'm after. Okay. Any questions on ES? Is it anyone rollout? Is it making sense? Clicking a little bit more. It should start clicking more. You should be curious. You shouldn't be frustrated.
I'm not frustrated.
Okay. Yeah,
Curious.
nobody should be. Yeah, it's just stay curious. That's all you have to do.
Nah, I was able to see some of that through prior experience, but wasn't expecting that drop all the way down to there. So it's kind of good
Yeah.
to see what I need to go back out and take a look at and build on. So have some studying to do this weekend.
Yep. And I mean, you use fibs if you're, if you're familiar with fibs, definitely use them, right? So this one here, are you familiar how to play 382 fib?
Yes.
What does 382 bounce mean?
In respect to price action, or
Tell me whatever you
Uptrend is
can.
relatively strong.
Whenever you bounce off
I mean,
382 in an uptrend, that means that it's a really aggressive trend up. Typically, stocks don't bounce off 382. It's not a normal behavior that they bounce off of 382. If they do bounce, and look where we bounced today. Surprised? I was surprised that it bounced. I mean, I wasn't surprised that 382 was there. I knew that 333 to 4130 was a big level just because the POC, but then now you add this one, it's like, oh, right? It adds a little bit more confluence. Yeah, 382 is used in heavy uptrends, right? So if you chart, you can chart it pretty much on any time frame, and if you're catching, let's say the moves here, let's say this move to this move, if you're gonna lock in on this. So here's your 50, and that's usually what I go after, or the golden pocket between 618 and 682. And then here's this one. Let me this one. And this one, I think I drew that one wrong. There's that kind of golden pocket. And if it's dipping more into your fibs for the bounce, what does that mean to you guys?
The trend can possibly reverse.
Good job. Yeah, the trend's getting a little bit weaker, right? So now, if you look at this low to this high, there's a bounce of, right at the 50. And then there's one more here that we got. And now you see, you're kind of dipping, you're dipping below it, right? This should be your warning signal. Hey, we haven't even had any of these pull back that far, but this one pulled back far. So, and it's almost like this would be your break of structure right here. Right, this is your break of structure right here in terms of price action, right? Meaning, you have a higher high. Let's say this is equal highs. This is higher low. This is your lowest low. Now you're making lower highs, but here's your first break of structure. If you count this one, you made a lower low, lower high, lower highs plus lower lows equals downtrend. And here you're breaking this break of structure. So now you're for sure confirming, hey, we're going to go a little bit down. And I did warn you guys on this as well. Does anyone remember where?
51.
It's in the 51 level.
Okay. I was talking more about this. Let's see. Said don't short the trend. You need to see lower high and lower and low on 5 minutes. Here's your 5 minutes. Here's your higher low, higher low. This, if you want to call it, I don't call this higher highs. This is not higher high in my world. This is just a liquidity grab. Lower high. This is a first lower low. This is my really break of structure. 5 minute reversal. And this is the level to short. Does that make sense?
Yeah.
Okay. When you're looking at charts, it shouldn't be just looking at I'll give you this crazy idea how I envisioned this. I was driving down the mountains and I tried to explain to my wife. I was like, hey, these look like stock charts. And she's like, okay, are you on drugs? I'm like, no, look. And I tried to explain to her, if you put this, doesn't this look like if you're driving the mountains and the peaks, right? And I'm like, okay, well then to my head, you have to look at the stock market as these mountains and peaks. And smarter traders, price action traders, right? They want to short the breaks of these. The newbies, they want to catch the top tops all the time. And usually the catching the top tops is not the best idea. Or buying the bottoms, right? You need some kind of reversal, like a higher high, lower lows, or whatever your case scenario is, till you get comfortable and in tune with the market, what the market's telling you. Market generates a lot of information present. A lot of people, they use, the lagging indicators, the moving averages, this and that. They miss half the story that the market's telling them. They don't even hear the market. It's because they're looking at all the crap that's not important. So sometimes just try to kind of look at it from higher highs. And I believe we have a study, and I asked Sequence to do a class for you guys, because we got some new scripts, some new updated stuff, so he can go over everything so you guys can understand it and how to use it. So he's going to be scheduling that class to kind of go over all the indicators that we have and how you can get them, the purpose, what they all have, settings. So it'll be a longer session, but it'll be recorded as well. You guys can kind of understand that on the orb study, right? You guys have the stopping volume. You guys also have, you can have the, the higher highs, lower highs indicated with colors, like with the little dots. So if you're not familiar and you're struggling visually to see the market structure, is it this one or this one? It's, when I look at it, not saying that it doesn't take me long, but here, I'm just looking at, this is what I'm seeing right now. And then I double click somewhere. And you see this now. And now you see this bunch of crap.
You have the fail option too.
Yeah, and we have like failed auction, but I'm just trying to remind you guys, look at the price action as it's happening. There was actually an indicator that I really liked before, zigzag, this one. So if you guys go on this one will print these higher highs and lower highs. Like these dotted lines are your micro levels, and these big ones are your macro lines. So you see on the bigger picture, you're still making higher lows here, right? On the blue ones, and you're making lower highs now. So you're kind of reversing the trend here. But once we lose this lower low here, you're really confirming the trend is reversing. Okay. So try to visualize some of this stuff. That it's just that it doesn't look like a bunch of crap. There's a lot of information, a lot of data being told to you by candles, the types and volume, higher highs, lower highs, the struggles, equal highs, equal lows, like we are struggling here with equal lows now. Okay. So did this session help anyone, like at least see something else that you haven't seen before, or open your eyes to something? Hopefully it did. And if it didn't, I mean, trading is not a game where it's not a PlayStation where you come in and you pick it up and you're good at it. You're going to pay tuition, whether you like it or not. Either you're going to bust your ass learning time, and learning and learning and learning, or you're going to pay with money, and market loves the money option. Okay. If you haven't traded news events like tomorrow, I suggest you don't start tomorrow. This is just a suggestion, not an advice, but if you're new, if you're struggling from FOMO, if you lost your account before and now you're really trying to focus on learning, one day will not bring your account back. Consider it dead. Dead stuff does not come back to life. Move on. Focus on a process and a system, not your money. That's why you failed in the first place. System, process, and look, don't even trade tomorrow. Challenge yourself one day a week where you don't trade, where you just look for setups. Hey, I would have taken this. Let's see if it works out. I would have taken it here. This is, cumulative POC or whatever the case is. Just kind of study it out and see how you can repeat it and kind of have the same feelings, try to replicate the feelings and kind of the adrenaline behind it. Okay. We're stuck at the previous week value area high right now. So we are almost, guys, and what happens if we get inside here? Maybe for newer people, does anyone want to explain what happens here on a weekly chart? Anyone? Does anyone know what's happening on a weekly profile? Bean, what's happening there?
Well, if you're falling into prior week's profile, you've traded outside of what was the acceptable first signal range. You've broken out, and when you fail and fall back inside, your first target is going to be the POC. You may go all the way down to the bottom of the prior week's value low from a exploration, essentially, of the area, because you're looking for value and you failed.
Name called?
Failed breakout. I mean, but it's for a period of time.
80%.
Oh, 80% on the weekly. Yeah.
Yeah, I was waiting for you. I would not short between value area high here and this. You guys know I don't take this. I need to see this, and then our odds really, really increase here. And they increase because there's not much volume besides, once you crush this, look at the profile for current week. This was all fluff. There's not enough volume here to stop it. Once we break this, your chance of hitting this is very, very, very high. It's about odds. It's not about you being right or wrong. So I would definitely short below this. So I would watch for this 80% rule on the weekly. Just to see how well do we react.
Shorty, the prior week POC is also in that same area, 41.31.
I mean, there's going to be a lot of stuff in there just because it's now 12 days in that range. So this POC is not really going to shift much.
Yeah, makes sense.
It's a pretty powerful level. Once we lose that, and then this week is also a VPOC at 40.80. I had 40.80. I just can't. Either it was in my dreams or something. I had 40.80 level as a bounce level.
Yeah, 40.80 and 40.90. You had at the both of those, but 40.80 you had first.
40.80 is the previous week value area high. Potential bounce I have on there.
Yeah, that's what I had written on my chart. I thought I was hallucinating last night. I literally woke up at 5 and I'm like, why do I have 40.80?
No.
It's
But
also
it is a
the third sigma.
Yeah. So this is a VPOC here weekly. I would definitely not ignore this. Once you lose this, you know, you're going down the levels. I'm pretty sure at 40.42, we have a VPOC on a daily. I'm pretty positive there's one there.
Yeah, there's one there, and then
At
Yeah,
4,000, right?
yeah.
Should be 40.42.5 at 4,000 that we have a
40,
VPOC.
42. Yeah, I got 40.42.75, and then
Should be 399.25.
Yep.
yeah,
March 28th and March 29th.
Yeah.
VPOC.
Yep. So those would be the targets once you lose 40.80, and those would happen. I would say the 40.40 would happen quickly. The other one would drag. And if you guys just look at the volume is heavy here. You know, this is pretty heavy stuff here. So I would expect them to kind of come back to this level here, that they hold it, and then get inside and do this crap right here. And I'm not too excited to trade that. Okay. All right. Well, hopefully you guys are ready, but I suggest if you haven't traded this type of day that you avoid it. At least wait till, I guarantee you, if you focus on 30 minutes of the last day for 5 days, you're going to be profitable for the week. If you don't believe me, try it. It will test your patience. You're going to let the trades come to you, and then, you know, it's kind of like the reward, right?
yeah.
Like you're going to start feeding the good habits, the good behavior, and rewarding yourself. So I suggest you guys don't trade tomorrow if you haven't traded, unless you have some profit and you want to mess around and risk some money. But just accept the risk. Don't run away from it. If you lose it, you lose it.
Yeah,
Okay.
rather not.
You said waiting
Shorty.
on or watching on the 30 minutes, Shorty?
Say it again.
You said watching on the 30 minutes would be smart for tomorrow, just like keep looking at the big picture?
No, I look at consolidations of 30 minutes every day.
Oh, okay. I see what. Okay.
Yeah, I look at, you know, I'll always look at consolidations. Like I know there's one here, and I'm seeing an overlap here. So, and you guys know how I can find previous demand zone right here. That was stuck right there somewhere. So I use 30 minutes to find the POCs, the accumulation setups, right? For intraday stuff, you can use 15 minutes. Just 30 minutes has been a little bit more effective for me, at least. It's easy to tell where it's at.
Yeah.
Shorty, do you even look at the prior day value area stuff before like an event day like tomorrow?
You can. They did throw 2 twists or 3 twists lately into our lap. Keep picking up wrong SVP. I don't know why. Let me show you what they did. So if you look here, we talked about this one. I don't know if you're on or not. The price made a higher high. The value did not make a higher high. It did not go higher, right? You see this value area here. It's still lower high and lower low. The difference between the value area, right? You want to know if this happens, the next thing that I check, how wide is the value area, right? Did they explore the price more? So here they had 28 points exploration of value area, right? Well, how many points was the exploration here? And I would say, you know, this one was 14. I can't count this day. You guys remember that this was a really tricky day because what they did here. They had, you know, they were open for like what, 2 hours? I don't even know how long. I can't count this day, which was Friday. So I have to count Thursday as a compare. And if I compare the value area here, this one had a range of 24 points. This one had a range of 28 points. So it's not like you brought in more buyers and explored the area. You really didn't do shit. You should have made a higher high on the value area. You had no choice but to make a higher high. And now once you lose this POC, you're going to have to validate these buyers. Because this is the buyers that caused that, you know, a V-shape. I mean, we've had so many V-shape recoveries. Pretty much all of them have been V-shape recovery. They have to look at this one went up, and what did they do? They came back, validated it. Now this one went up, right? Went up. We haven't broken the range yet. I know people get excited on Twitter. We haven't broken much out of here yet. We're actually making lower highs and a lot of selling showing up here. Either they're hoping to get it up here and sell, and they were not able to get it there on time. Just remember, when they're lifting the price up, if they do it too fast, the retail can't catch on, and they can't FOMO. They need liquidity. So what they like to do little by little. Pump, do this, give them a pump, empty out on retail, do this, retail buys, right? Again, retail buys here, because now they're like, hey man, double top, I don't know, it's most time bearish, but whatever. They're like, we're gonna break this now, and what do they start doing? Start buying calls, and they're buying shares of NVIDIA at 300 and 280s, and then they're like, okay, well, thank you for being there for us, and then poop, they dump. If they do this move too fast, what would happen? Let me ask you a scenario. I tell you this stock is at 4,000, let's say, and one day you see a jump to 4,200. Would you buy it here?
No,
if this move
I would
happened
not.
like this. Okay, well, now think about the feelings. I go here, oh, a PR comes out that this stock CEO is doing the best CEO of the year. They're coming up with AI and this, and then they're consolidating. Would you buy here?
Yeah, possibly.
Yeah. And then they lead you more. Then they pump it more, and then they're like, hey, listen, remember that AI? Well, we also have Metaverse. Remember Metaverse? Yeah, let me tell you more about this. Boom. And then you see this.
Right.
They empty out the warehouse and they don't have any product to sell, so they got to come back, bring it back to a value that they believe. They do not change their values like retail does. They stick to the plan of their purchases, and it's a little bit more complex when you're a portfolio manager. You really, I don't know who's ever seen one or talked to one. You come in the morning in the meeting and you have your boss, the managers, portfolio managers, right? You come in and you tell them your ideas. You present your idea. Hey, I see this is happening. You share basically your case. I think we should start buying natural gas. We should do this. We can do the hedging this way. It's all about, protection for them and being delta neutral for the most part. And then there's, different styles of portfolio management, whether it's arbitrage or whatever that is. But the portfolio manager comes out in the front every day, every week, every month, and they present short-term, long-term cases to their peers. And do you really think this guy, a portfolio manager on Monday, is like, yeah, man, I think I should buy AMD at 90. Hey, man, fuck it. I think, and you come back the next day in front of your boss, and he's like, man, I changed my mind. I think we should buy it at 96. I guarantee you that portfolio manager is going to be there next week bringing coffees.
He's looking to sell at 96, not buy.
Well, not only that, if he really had intention of buying at 90, he's not going to move that target to buy. He's going to sit there with his orders resting, and they buy it there. It's not like retail. Retail is this, man. Man, I had a chance to buy a Tesla at 100, but you know what? I'm going to buy it at 200. They don't do that. They will never do that. I've never seen it. I've never seen it happen before. And I've been around it. I've seen it. So I just don't know why people, you buy, and I know this is easier said than done, but you buy when there's a lot of fear. And you have to start. The problem is people don't know to recognize, is it real fear or is it not? And that's where people get in, like, oh, Tesla was dumping at 100. AMD is another good example, right? I mean, when AMD was at 51, like 55ish, like people didn't want to buy here, but you're willing to buy it at 95.
Yeah.
Like, I'm not willing to buy it at 95. Fuck that. I don't want it. Like, I want it at least. I'll average back in at 78. That's what I did last time. And then I'll average more, and then I'm going to buy a lot. where I bought last time, and then I'll sell it back at 88, and I sold all of it here. And then I'll let these retails create liquidity for these guys, because this is the first time they're retesting this. Once they create this liquidity for them, oh, look at this. What do you know?
Yeah, that's exactly what I have.
Now
So
they're
do
gonna
you
come
get,
back.
is there any level that you get bullish at tomorrow? Like, are you just looking for lower prices to get bullish, or just above 41.85?
I don't have a case to be bullish. I don't want to be used for price discovery. I don't want Shorty to do the
Yeah.
price discovery on 41.60 level and here. I don't want to be the one exploring bids here. I want you and others to explore the bids, not saying you, but I want others to explore the bids, and I'll confirm it with them. I want their back to do
Yeah.
the work, and I just do a click.
Hey,
Right.
They
Shorty,
want 1000%. So I just want 20%. You know, if I can, that's great.
what was it like during the bull run with, I wasn't around, with the volume profile. I mean, because what you just said with the price discovery, were you mainly buying dips then when it was like clear bull trend like crazy?
Well,
Or were you shorting stuff?
you short stuff, but it's how you shorted it, right? The options were not invented, for profits. Initially, options were only invented for hedging, right? They were not an instrument that you should be using to create profit on your P&L. So it depends how you shorted, and there was different vehicles for shorting, whether it was VIX or whether it was an inverse of something, right? That's how you would have shorted it, and you would still keep your positions but lower them. Let's say if I was long SPY, I'd be looking to play the inverse or buy VIX or something opposite, right? And then you look at the different ETFs, and it's like, hey, on this bull run, something's usually beat up. There can be that every ETF is running. Like I don't think it's ever happened where every ETF is running as SPY is running. Then you start kind of concentrating and looking for the values of, hey, well, if this hasn't been running and we made a lot of money, our capital gains are good, you start offloading and you're looking for the beat up stocks. And of course, the fear and greed, you will eventually make money on stuff that's been beat up. And that's how, at least way back, they used to hedge. Volume profile, believe it or not, we're drawn, a long way back, we're drawn manually. And you will look at it day to day, you will calculate the value areas, you will look at it and compare them like, hey, and I showed you guys remember that snippet? I showed you guys how people looked at it and the 4 questions that I asked you guys to ask yourself. That's how basically they did it. Day to day, they would compare, be like, hey, I'm bullish and bearish based off this. The value area moved down, let's say moved up, but the volume didn't follow. The direction of the move was to go up, but the volume was less. The value area didn't shift as much. There's not as many buyers available. We rejected a certain level. You put those notes and then you compare them day over day, and you're like, oh. Then you look at it for a week. You look at the open and the close. On a weekly level, you look at a daily, and you would be like, oh shit. Like, oh, we open here, but we close below, and then we open here and we closed above the open. Then you conclude certain, whether it's bullish or bearish, right, for the week. But once these candle charts came into the picture, I think it made it easier for people to. I think it made it easier to speculate by retailers. Because before you had to really sit down and use repetitive logic to figure out how to trade. Now, you're like, hey, man, this candle kind of looks bullish, right? And people go off of it and you trade off of it. And usually, people trade it off of daily charts, not necessarily off of, you had a day open, close, right? Low and high, and you would trade off of that. You wouldn't really trade off of 5-10 minutes.
Shorty, do you have anything there at 40.12? Remember that?
40.12.5 is a big level. I mean, it's been there for past.
Okay. Yeah, for a long time.
Yeah.
Okay.
Yeah, that level is there, but the market remembers new levels, right? Markets and progress of remembering new levels. So let's see. This level here is going to be very, very important to cross tomorrow.
Shorty, some of these longer term levels, they must shift, right? As the contract changes and there's.
Are you talking about the recent quarterly shift?
Yeah, I mean, I'm just saying, like, when you say, like, when you think about old levels that come into mind, like, maybe from like the last
If you're
August
talking to
ramp
me, I
up
was more like during 2021, it just went up like constantly almost.
Oh, I'm sorry. I thought
Days
you were
and
talking
days.
about way back, like 15 years.
No, no, like just in more recent past, because like I feel like we've been dealing with bear market and sideways market, and
Yeah, well, I mean, the last, the bull market from 2020, if you're talking about like this crazy run here, there was a lot of fear built into every move up. I would say a lot of people that caught the shares and bought shares and held it. I had some, right? I made decent money. I made good money on the options because it was basically just buy and hold. Like it was running. I mean, it's not like we made a lot of, lower lows and broke a lot of trends in some cases here, but overall, I mean, it was a fairly, I would say, easy trend if you had shares and you're quick enough to snap them, right? If your opportunity to buy was here and you snatched it on some really good stocks, like Apple was cheap, there was a lot of cheap shit here at this point. And if you're able to buy this, I mean, a lot of people probably started taking some profits off, and then it usually means, if you bought, I had Oxy, I don't even know, maybe it was $7. I had, what was the company that had the vaccine?
Pfizer. Or Moderna.
Pfizer.
A newer
Moderna?
pharmaceutical.
Moderna.
No, the other one.
Novavax.
The-
Oh, Johnson.
no, a smaller
Johnson.
company. J&J is
Norvax.
huge. What is it?
Moderna.
Novax.
Oh no.
Novavax.
Novavax.
And Vax.
And
That was a
Vax.
daily for.
Wasn't that for like the monkey thing? Monkey pox and shit.
Well, I don't know what they had, dude. When this
Something.
started here, where was it? 2020, somewhere around here. I bought some. Where was this crap? I think here.
God.
Man, I bought some $20 calls for like a year out. Dude, this thing exploded.
Jesus Christ.
And did
I
you
didn't
hold them?
care. I think I made like maybe 1,400-1,500% on those, but yeah.
Wow,
And
man.
I had some shares
Beautiful.
as well, but this was good.
Wow.
This was a good company. I mean, and some of it's luck, honestly. It's not like I knew that this company is going to happen, how the COVID is going to roll out. I think there was a lot of, FOMO from others that helped as well. But there's a lot. I would say if I had to pick two skills for trading, it's patience and luck. Like, I know we talked about this one. I would say this was strictly patience and then luck. Right? We had this on our charts that we were buying this stock right here at 72. I don't know what you guys got, FLs, but we were targeting to buy here. And we bought it, and then they had I guess, supposedly a good ER. I don't even know. This was a longer term hold for me, and they spiked it. So patience paid, luck confirmed it, and now we're reaching, some supply levels, and time to get out a little bit.
Coincidentally, when the dividend paid out.
Yeah, that's happening right now.
Somebody, if I remember Zim, right? Who was that
Oh
dumpster?
yeah, don't talk about Zim. Lewis is gonna get mad.
Oh yeah, Lewis, that's what it was. Oh man.
Yeah. All right, guys. Well, I'm gonna go catch some sleep, and I will see you guys tomorrow. I suggest strongly, please don't blow up your account tomorrow.
Thank you, Shorty. Appreciate
Be
you.
patient.
Thank you, Shorty.
Thanks, Shorty.
See you guys tomorrow.
All right, buddy.
Thank you, Shorty.
Good night, everyone.
Bye.
Good night, everyone.
Have a good night.
Good night, guys.
Later, Cuban.